If you check the local press in Dhaka recently, you might catch a deeply unusual headline. Russia has formally approached the Bangladeshi government with a highly specific proposition. They want to settle all future bilateral trade entirely in Indian rupees. This is an active operational plan. To facilitate these currency swaps, Moscow is preparing the groundwork to open a dedicated physical branch of a Russian bank right in the capital city of Dhaka. Look at global finance. What covered Russia's SWIFT access, cutting off trade in dollars and euros. This creates a massive problem in South Asia. Between Moscow and Dhaka, $2.2 billion in trade is stranded, completely lacking a currency to facilitate exchange. These trades involve critical national infrastructure, like the Rupee nuclear power plant, a massive project Russia is building on the banks of the Padma River, with technical assistance from India. When a global power is suddenly blocked from Western markets, the standard assumption is that they will immediately pivot to their largest economic partner for survival. But Moscow is deliberately bypassing the Chinese yuan for this deal. Instead, they are pushing a third-party currency, the Indian rupee, to handle their business with Bangladesh. Which raises an immediate question. What is the actual strategy here? The most common theory is that Moscow is stuck with too much Indian currency. Since Russia sells billions in discounted crude oil to New Delhi, people assume they are trying to offload their excess rupees onto Bangladesh. This chart shows the actual trade flow, revealing a massive imbalance. Of the $2.2 billion in total trade, Bangladesh only exports $800 million. Settling in rupees means Russia won't drain reserves. It will actually accumulate hundreds of millions more. You don't get rid of a currency by setting up a trade structure that guarantees you collect even more of it year after year. The math points to a completely different reality. Moscow is actively choosing to stockpile Indian currency as a long-term asset. So if they are intentionally choosing a currency to hold onto, why avoid the Chinese yuan? Recently, major Chinese banks have begun rejecting multiple Russian trade deals. Beijing is highly integrated globally, actively avoiding secondary Western sanctions. For Russian policymakers, this is a glaring vulnerability. They have no interest in trading their historical reliance on the US dollar for a new reliance on the Chinese state. They must diversify. Since the 1960s, Russian strategists have looked south, seeking a foothold near the equator. A presence in Dhaka provides a direct gateway to ASEAN markets and sits squarely astride the busiest shipping lanes in the Indian Ocean. And this relationship has deep roots. In 1971, when Bangladesh was fighting for its independence, the Soviet Union deployed a naval task force to the region to deter foreign intervention, ensuring the new nation could actually be formed. Dhaka isn't a random choice. Bangladesh represents an ideal geographic pivot, historically friendly and centrally positioned, and outside Washington and Beijing's control. By explicitly requesting to do business in the Indian rupee, the Kremlin is sending a very clear signal. They are making a massive, multi-billion-dollar bet on India's economic trajectory. They are essentially treating the rupee as a long-term, stable reserve currency, a safe haven they can trust, while the rest of the global market remains fractured and volatile. If the government in Dhaka officially accepts this banking proposal, the regional dynamics shift instantly. The agreement would wire the economies of Moscow, New Delhi, and Dhaka together into a tightly integrated financial loop, completely insulated from Western banking systems. When these economic interests merge, political friction becomes a significant liability. With Russia providing the nuclear technology, urea, and energy supplies that power the country, and India providing the financial rails, state-sponsored anti-India sentiment within Bangladesh shifts from a political tool to a direct risk to the country's economic stability. This use of the rupee serves as a calculated masterstroke, allowing Moscow to engineer a permanent, sanctions-proof economic alliance right in the heart of South Asia.
If you value clarity over chaos, explore more on Clear Lens X.